Good afternoon and welcome to Biztech Asian Midday Market Watch. I'm Samantha Voon and it's Tuesday, the 16th of April. Our guest today is Glenn Yin, Head of Research and Analyst from AETOS Capital Group, coming to us from Australia. Glenn, good afternoon.
Good afternoon to Sam. Great to be here again.
Thank you for being here. Okay, so first of all, let's have a look at the Asian stock markets. All right, it's all going down. We have the Japanese Nikkei 225 down 1.99%, the Shanghai Composite down 1.43%. In Hong Kong, the Hang Seng is down 2.13%. In Australia, AXX is down 1.52%. In South Korean Kospi, down 2.41%. In Singapore, the STI is down 1.29%. And in KL, the KLCI is down 0.37%. Glenn, what is happening with the markets?
Yes, Sam, as you said, it's basically another time that is a sea of red again. I think global markets are basically taking a very negative lead from Wall Street overnight, and it has been going on for a few weeks already.
Okay, let's talk about the interest rate cuts. Yeah, it
Sure.
was it was first estimated to decrease to 3 cuts, and now with the current geopolitical mess, is it completely out of the window? Share with us your thoughts on that, Glenn.
Yes, Sam. So spot on. We have had 3 consecutive months of rebound in US CPI and PPI. I mean, it's hard not to have inflation jumping higher due to factors both internal and external to the US economy. On the outside, we all know, like you said, the geopolitical mess. That's the tensions are rapidly rising, especially after Iran's attack on Israel over the weekend. And most importantly, it's directly from Iranian soil. So that makes a huge difference. On the inside, though, the Biden administration has been spending heavily. For example, the administration had just forgiven another round of student loans worth nearly $7.5 billion on Friday. So these physical stimuli are releasing more purchasing power that was tied up in loans previously. And this is also evident in the latest retail sales data from last night, came in hot at 0.7%, which grew at more than twice the pace of market expectation. And the previous reading from February was also revised 30% higher. So yes, spending is going crazy. It's therefore hard to see inflation coming down to the Fed's target of 2% in the foreseeable future. And this is why we're hearing so much about rate cuts being thrown out of the window for 2024.
And how about the US markets? With such strong headwinds, will we see more significant downside risks to come for the US indices?
Yes, Sam. As a result of this, equities are steadily going down. We talked about this on our last show, which I believe is April the 2nd, Biztech Midday show with you and Jeff. S&P 500 was in this ascending wedge pattern, which from the point of technical view provides great downside potential as the trend lines close in to eventually create an intersection. And it turned out that it did. The breakdown took place at roughly 5,230 point level. Now it's sitting at 5,060 points after the sell-off from last night. There is, however, some silver lining in the sea of red. That is, Goldman Sachs had reported over $4 billion in quarterly profits, largely thanks to the massive bond issuance from the US government.
And I'm sure this US bond issuance and services are affected by the interest rates. So what do you foresee happening, Glenn, with this?
That's a very good question, Sam. I do think that the higher interest rate outlook is becoming a major problem for the US government as the cost to service debt is directly linked to interest rates. The government bond, being a fixed income security, has to remain competitive in the face of other assets. So when rates stay up so high for so long, and fingers crossed it doesn't go any higher, it's essentially increasing the cost to continue borrowing money from investors. And I believe this was also discussed during Treasurer Yellen's visit to China recently. So investors must bear in mind of this while pricing in for different scenarios going forward. But the very question is this: will we see any cut this year at all? And I think the answer is definitely yes. It may be a bit later, but it is more than likely to happen this year, because we shouldn't forget what high interest rate does to businesses. The Silicon Valley Bank turmoil from last year, and the quite recent New York Community Bank corporate sell-off due to its large portfolio of commercial real estate troubles in major cities across the U.S. So yes, I still see that coming. So, but the question is whether it's a voluntary cut or is it forceful cut due to a crisis that's enduring.
Mhm. Mhm. Okay, thanks, Glenn. Thanks for your insight. Hopefully, some good things happen from there. Yeah.
Thank you.
So, we've been speaking to Glenn Yin, Head of Research and Analyst at AETOS Capital Group. This has been Biztech Asian Midday Market Watch. I'm Samantha Voon. And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners, TV stations, radio stations, as well as their websites. Remember to like and subscribe. Thanks for tuning in.